Hello everyone, welcome to Quantsapp. Myself Vignesh. First of all, thanks for your valuable time for joining me in this video. So if you are new to Quantsapp and you haven't installed Quantsapp application yet, kindly install the Quantsapp application at the earliest. The link for installing the application is given in the description below. So what is the benefit of installing the application? So I would say if you install the Quantsapp application, you will unlock the benefits of 25 free tools immediately. So you might be knowing Quantsapp has approximately 70 to 80 tools, out of which 25 tools are free of cost. So if you install the application, you can unlock them immediately. Apart from that, if you want to know more about the paid tools, like exactly how you can use the paid tools to say improvise your trading journey. So if you want to know more about paid tools, because Quantsapp has almost 3 to 4 proprietary tools like RPG, triggers, you can say chart, order and trade. So today we will be discussing about order book data only. So if you want to know more and if you want to explore them, what you can do is I have also mentioned the video libraries link in the description. So kindly click on the video library link, okay, and you can it will automatically redirect you to the video library, or else if you have installed the application and if you have logged in, kindly click into the learn section. Under self learning, go to video library. So what is video library? Basically video library is a banks of videos, I would say. So you will be getting access to almost all the tools which Quantsapp has, and that too we have covered each and every tool in multiple languages, English, Hindi, Marathi and Tamil. So you can go and choose the language as per your convenience and you can explore almost all the tools. And while exploring the tools, if you have any query pertaining to any specific tools, feel free to contact us on the helpline number. Helpline number is handy on the screen itself, so you can immediately dial us, or else what you can do is click on the user profile and go to support section. Okay, so you can also write us at support@quantsapp.com, or else the helpline number is also given over here. Okay, so today, as you see, I would say we have captured a decent move in Nifty and Bank Nifty. So how you could have captured this move using order book data? Okay, that is what we are going to talk about. Okay, so before getting into today's topic, first I would like to explain you a few rules, or you can say a few conditions which you have to abide by before implementing the order book. Okay, so give me a second, let me share the blackboard first. Okay, so conditions for order book data. So we have covered this order book data multiple times. If you might have seen my old videos as well, I have covered this n number of times. But today again, you could have captured a decent move in Nifty and Bank Nifty if you would have had the access to this order book data. Okay, so those who are old, you might be aware of this, but those who are new, as we see more and more people are joining Quantsapp every day. So today we'll again discuss about this. This is, I would say, specifically for intraday trading. This is extremely fruitful if you apply this in the index, but what I would say is even in stocks this gives decent returns, provided you have to follow certain conditions, which I will definitely explain you at the end of this video. Okay, so the first condition for implementing order book data is, say approximately you need a 40 to 45 minutes of consolidation. Okay, my handwriting is not that good, kindly bear with me. Okay, so say a range bound move. Okay, a range bound move in the market. Okay, so approximately you can say 40 to 45 minutes of consolidation, a range bound move. And say the more the consolidation, okay, say if the consolidation lasts for 1 hour or 1.5 hour or 2 hour, so definitely it's a good sign, I would say, because the more the consolidation, the breakout or breakdown will be that stronger. Correct? So now the second one is we have to wait for a range breakout. Do not anticipate anything. Let the system trigger the trade, then we will go and initiate it. Okay, so the second point is range breakout or breakdown. Okay, now the third one, suppose if we see a breakout after consolidation, if we find breakout, then buyers should be 2x as compared to sellers. Buyers, I need 2x as compared to sellers, and if it is a breakdown, okay, if it is a breakdown, sellers should be 2x. Okay, if it is a breakdown, then sellers should be at least. Okay, this is the minimum criteria I am saying. Anything over and above this is definitely a good sign. Okay, so these were the three conditions. The fourth one is do not trade on random spikes. Okay. So you can take a snap of this, or else you can note it down however you feel comfortable. So what are the 4 points? The first point is I need a consolidation range, that is a range bound move. Say for example the market is moving like this. Okay, so the market is moving in a range. This is what I am expecting. Okay, the market should be range bound, and this is purely a scalping strategy, purely an intraday strategy. We will try to scalp say 50 to 100 points in index. So if you trade at ATM options and say if the Nifty or say bank Nifty moves approximately 50 or 100 points, then definitely you will be making somewhere around in 50 points. ATM options will move with 0.5 delta, easily 20 to 25 points you can fetch in ATM options. So depending on your lot size, you can definitely make decent money out of it. Correct. So the first condition is 40 to 45 minutes of sideways, a consolidation range, a range bound move, and then I will wait. I won't anticipate a breakout or breakdown. Let the system trigger the trade, and then I will go and initiate. So what is the second condition? Range breakout or breakdown. The moment I see, say for example a breakout from here or say a breakdown from here, if the system triggers the entry, then I will go and initiate. So I will wait. Okay, patiently I'll wait for the breakout or a breakdown. Once I see a breakout, what I will do? I will go and check the quantity. Okay, if there is a breakout, I need buyers should be at least double. Say if the sellers are 100, I need buyers should be at least 200. Over and above 200, anything that is definitely acceptable, not an issue. But minimum, make sure that buyers are at least double as compared to sellers if you are trading a breakout. Okay, now after consolidation, if you are finding a range breakdown, okay, then make sure sellers are 2x. That is, if the buyers are 100 on that particular candle, make sure that the sellers are at least double. Okay, we'll explain this in detail when we go and see the example. We'll check out today's live markets move in Nifty and Bank Nifty. Okay, and the fourth one is do not trade on random spikes. We'll explain that as well. Okay, so this is the home page, I would say, the interface of Quantsapp. Okay, so let me give you a brief introduction. If you see on the right hand side top corner, the major indices are over here: Nifty, Fin Nifty and Bank Nifty. So you can also see the build-ups of Nifty, Bank Nifty and Fin Nifty. See, Nifty is having a long build-up currently, Fin Nifty is currently going under short covering, and in Bank Nifty also there is long build-up. So you can get an overall bird's eye view with this top 3 indices over here. Apart from that, if you see, there are a lot of fancy indicators in the home page like unusual option activity, open interest. So it's definitely worth exploring. You can install it and you can immediately get access of 25 free tools. Okay, so let's move on and let's check out today's Nifty and Bank Nifty's move. Go to analyze, go to chart order and trade. Okay, so Bank Nifty is plotted over here. Let me change the time frame to 1 minute. Okay, so what I prefer is, I usually prefer trading it in say 1 minute chart, but there are people who usually prefer trading at a higher time frame, say 3 minutes or 5 minutes. That's purely subjective. Okay, I won't deny that say trading in 5 minutes is not good or something like that. I won't argue on that topic, but depends, that is subjective. Now say for example, if I am seeing a breakout, okay, a range breakout, so by the time you see a range breakout at 5 minutes time frame, you might have already missed a significant move of say 30 to 40 points based on 1 minute chart. Okay, and at the same time, suppose I am seeing a breakout in 1 minute chart and I am gauging, say I am expecting a movement based on 1 minute chart, I might be wrong as well, because as per 5 minute chart, I might not get a closing above that range. Correct? So that is subjective. You can trade on 1 minute chart or you can trade on 5 minute chart. That purely depends. Okay. So say This is Bank Nifty's chart. Okay, so I have plotted a 1 minute graph. Now if you see today's opening candle, okay, so let me mark a range. Okay, so see, okay, so this was the opening candle's high, and I would say this was the opening candle's low. Okay, so approximately I could see a decent consolidation of approximately 1 hour, we can say, correct? And then what I said, what the rule says, I have to wait for the system to trigger the entry, correct? So here the system exactly triggered the entry. So here I found a range breakout at this candle, correct? So exactly at 10:17 I found a breakout in Bank Nifty, correct? It broke the day high, you can say, or else you can say it broke a recent swing high, correct? So now go at the bottom and check out the quantity. Okay, here I have plotted order book data, buyer initiated quantity and seller initiated quantity. So those who don't know how to plot, let me explain it once again, because most of you might be knowing how to plot it. Let me go to indicator and just type initiated over here. Okay, give me a second. Initiated. Okay, so here see, Q order book buyer initiated quantity I will add, and Q order book seller initiated quantity I'll be adding. Okay, so both these indicators are plotted. Now for my convenience, what I'll be doing is I'll make some slight changes. Will denote buyer with a green color, okay, and will change this histogram to line chart. Okay, and seller will denote it through red color and will change this histogram to line. Okay, now both these indicators are plotted. Now for my convenience, what I'll do is I'll merge this indicator. Okay, so just click on these three dots, move to existing pane above. Okay, so now the indicators are merged. Now if you see here on the right hand side, the scales are not yet merged, correct? So click on these three dots and pin to scale A. Now the scales are merged and the system is ready, correct? Now this was the day high for me, and this was the, you can say, the opening candles high and opening candles low. So as we saw at 10:17 I found a breakout, correct? Usually what happens, say usually retailers, what they do is they usually mark levels on charts. Okay, so usually most of the retailers are good at marking swing high, swing low, and then usually when it gives a breakout or breakdown, accordingly we go and trade. But usually what happens is sometimes it gives a breakout but then immediately it retraces, correct? And that is where most of the retailers get trapped. So what you need to confirm whether this breakout is sustainable or whether this breakdown is sustainable or not, that is I would say data, correct? So if there is a data which can give you the exact count, like how many buy orders were punched at that particular time and how many sell orders were punched at that particular time, that will definitely help you to gauge whether the breakout is sustainable or not. So at this candle at 10:17, if I see, check out, the buyer initiated quantity is 10,650 and the seller initiated quantity is 4,080. So clearly I can see the buyers aggression are more over here, correct? What the rule said, rule was saying that I need at least 2x buyer as compared to seller. Here I am getting more than that. So anything over and above the minimum requirement is good to go, correct? So here if at the close of this candle, say I would have taken a trade, let me mark this. Check. So approximately I would say a 361 point move, approximately you can say 395, 396 points move, but practically speaking it is not possible if the market has given you approximately 400 points move. So it is definitely not possible to capture the whole move, correct? So say for example if you have taken a entry over here, okay, let me erase this. What will be your stop loss? That is the most important thing, correct? So my SL will be the immediate swing low. Okay, say this is the immediate swing low post entry, correct? You can say, you can get this as your immediate swing low. If you are a conservative trader or if you are an aggressive trader slightly, you can go with this as well. Okay, so let me mark it in red color. So okay, so this will be your stop loss, correct? So approximately I would say 100, 120 point stop loss. So as we are doing a scalping, correct? So my target will be approximately I would go for 1:1 or say 1.5:1, correct? So easily I got my target. It was more than I would say 2:1, correct? Almost approximately I got 3:1, correct? But the question here arises is, when am I supposed to close the trade? Now what happens is sometimes we go with risk reward. Say I got 1:1 or say I got 1.5:1 and then let me close the trade. But what happens is you end up seeing that Bank Nifty gave a decent move of 400 points, 500 points, and sometimes we end up missing a huge move, correct? So in that case, what you can do is, as and when this keeps on moving and it keeps on forming a immediate swing low, just keep on shifting your SL to immediate swing lows. Now see, if you would have taken a trade at this candle, it slightly retraced over here and then it moved up, correct? So what I'll be doing is I'll shifting my SL over here simply and I'll ride this. Okay, I don't want to anticipate that this is going to be my target or this is going to be my stop loss. All you can do is you simply focus on your stop loss, let the market decide what you want to make. Okay, so the target, let the market decide, you simply focus on your stop loss. Now if you see, again it went up, it slightly consolidated over here. I'll go and mark this as my immediate swing low. Now again this, correct? So finally you can say somewhere around this level you would have closed. That is approximately you would have made you can say approximately 300 points you would have made definitely, because this is where the swing low actually caught you. So this is where your stop loss would have got hit. So approximately you could have made 300 points. Okay, now let's go and check out Nifty. Okay, so I hope you understood how you are supposed to plot this order book and how to take entry and how to trail your stop loss. Okay, the most important part while using order book and while capturing moves is trail your stop losses, because one or the other day there is a possibility that Bank Nifty might give 500 points move or say 1000 points or 1500 points move, correct? So if you keep trailing your stop losses, you will definitely end up capturing the whole move. Or else if you stick with say 1:1 or 1.5:1, definitely no doubt consistently you will be making money, but one of those days where Bank Nifty or Nifty say it gives handsome move, you will end up missing those moves, correct? So now let's talk about Nifty. Okay, so again the same strategy. Let me mark this horizontal line. Okay, so this was the opening candles high and this was the opening candles low, correct? So after consolidation, if you see here, I got a breakdown, but let me check the timing. So if you see from 9:15, it gave me a breakdown around 9:45. That is only 30 minutes of consolidation. What I said, what the rule says is minimum you need 40 to 45 minutes of consolidation. Always check out more the consolidation, the better the result will be. Okay, so here the breakdown is there, but definitely I won't consider it because it is not fitting into my criteria. Now around you can say at 10:44, if you see there is a strong breakout I can see. Now go and check out the quantity over here. 48,950 buyers, 9,400 sellers. Clear cut I can see 5 times aggression. So this is a definite bet on the long side, correct? So let me mark the range. So at the close of this candle, suppose you would have taken a trade. See, easily you can say 117 points move. Again, capturing the whole move is definitely not possible. So even if you would have captured around say 70 to 80 points, that would have been good enough, because if you would have traded at ATM options, definitely you could have ended up making around 40 to 45 points. So depending on the lot size, you could have made decent money, correct? So this was about Nifty and Bank Nifty. I hope you definitely enjoyed this analysis and I hope definitely you understood how to use order book. One more thing which I was about to discuss at the end of this video was how to use the same concept in stocks. Okay, even at stocks you can use this. Let's go and check out any random stock. Let me go and check out say Asian Paints. Okay, so this concept works well in almost all the stocks as well. Okay, now if you see, check out here, we can see a decent consolidation and then I can see a breakout. So at the breakout candle, if you see 15,000, let me mark it again, let me keep it, okay, give me a second. This is the breakout candle, correct? So I have kept my cursor, see 15,000 buyers, 5,400 sellers, correct? So even if I would have taken a trade over here, it was approximately 20-25 points in Asian Paints. Again, it is breaking a swing high, again it is giving a decent move. So whenever it breaks a recent swing high, or say whenever it breaks a range of consolidation range, it breaks and it gives a decent breakout, you can definitely go and check the order book quantity and you can decide whether this breakout is sustainable, or if it gives a breakdown, go and check out the quantities and decide whether the breakdown is sustainable or not. If you feel that it is sustainable based on the data, then definitely you can go and plan a trade accordingly. Now the question arises, what about liquidity? Because usually if you see in index there is enough liquidity and you can trade, but when it comes to stocks, there are certain stocks which are illiquid and you might get trapped, because at 1 minute time frame we keep immediate swing low as a stop loss. So there is a possibility that the stock might hunt your SL and it can again move up. So most of the time retailers get trapped when they trade at illiquid scripts, correct? So for that, what you are supposed to do is go to search option and search Liquidity Finder. Okay, just type Liquidity Finder. Okay, so what this Liquidity Finder is all about is, this will help you to filter out those stocks which are liquid enough and where you can definitely go and place your trades. Because see, if you see most of the times, if you are trading in options, okay, based on order book as well, you can go and trade in futures, or else you can go and trade in options as well. But if you are an option trader, there are certain stocks wherein the call and put side, if you see, both are quite illiquid. Okay, so in order to counter that, you can restrict yourself to say a limited set of 15 to 20 or 25 to 30 stocks wherein you will get decent liquidity and you can definitely use this order book data. Now what you are supposed to do is, if you want to check out any particular stock of your choice, go and check it out at search section. Okay, now here there is an option of filter by minimum stars. Okay, so here you can see 5 stars, 4, 3, 2 and 1. So what I would suggest you is stick with 5 stars as far as possible, stick with 5 stars. But after say some time, if you have gained enough experience and if you are say confident enough that you can easily gauge the breakout and breakdown using order book data, you can shift to 4 star, but not below that. Okay, ignore 1, 2 and 3. If you want to use order book data, stick with 5 at the initial stages. Later on, if you are comfortable, if you are feeling that you are confident enough, you can go with 4 stars as well. Okay, so let me check 5 stars as of now. Again, if you see, filter by symbol. Now here if you see call, put, call and put. Okay, so what I'll do, I'll select for call and put both, because if I see a breakdown, I'll be trading at put. If I see a breakout, I'll be trading in call. So I need both call and put. So 5 star, both call and put, which are the stocks that are liquid enough. So if you see Adani Enterprise, Adani Ports, Asian Paints, Axis Bank, Bajaj Finance, Bank of Baroda, BEL. So there are approximately, I would say 20 to 25 counters which are liquid enough and where you can definitely use this order book data. So just now we saw this Asian Paints. You can go and check out any stocks out of this. These are liquid enough and you can definitely trade on these stocks as well. So I think this is a very simple concept. Okay, let me give you a brief revision once again before ending this. Find out a consolidation range of say 40 to 45 minutes. The more the consolidation, the better result you will be getting. Wait for a breakout or a breakdown. Do not anticipate and say initiate the trade before it gives a breakout. Let the candle finish. Let the candle close. The candle, whichever candle is giving a breakout, place your cursor on that particular candle and check the quantity of that candle. Okay, if the quantity is supporting, minimum 2x is the requirement. If that is supporting, you can go bullish. If you are seeing a breakdown, whichever candle is giving a breakdown, place your cursor on that candle, check the quantity. If the quantity is supporting, go for a bearish trade. Okay, and do not trade on random spikes. This was one thing which was left out. Let me cover it out. Okay, so see here, see there are random spikes over here. Can you see a random big green spike? Okay, yes, the stock moved well, that is fine. But see again, if you see here a random spike, so Our condition is wait for a consolidation and then a breakout or breakdown. Do not simply see these spikes and do not simply see the quantity of buyer and seller on any random candle. Okay, this is very important. Most of the retailers actually what they do is they randomly plot a chart, they wait and they randomly go and check out the quantity on any particular candle. If the buyers are double, they go and initiate. If they check whether the sellers are double, they go and initiate a put trade. Correct? That is extremely wrong. You are not supposed to do anything like that. Wait for a setup. The setup which I explained, wait for a setup, let the system trigger the trade and then you initiate it. Okay, so I hope you definitely loved this trade. If you want to know anything more about it, you can definitely let us know in the comment section. Okay, till then stay tuned. We'll see you soon at the next video. Okay, thank you.